In the wild world of crypto, multi-million-dollar moves happen all the time. But what if I told you about one that wasn't about chasing profits, but about preventing a total catastrophe? Well, today, we're breaking down a really high-stakes maneuver by a major project with some seriously powerful political connections.
So let's just get right to the heart of it. Why on earth would a crypto project, one that's officially backed by Donald J. Trump, suddenly make an emergency Bitcoin sale worth over $11 million? As you're about to see, this was no simple trade. It was a calculated play to sidestep a financial disaster.
And it all starts with this number right here, $11.75 million. It's a huge amount of money, for sure. But the real question is, what does that money actually represent? It represents the sale of 173 wrapped Bitcoin, or WBT. Now, if you're not familiar, just think of WBT as Bitcoin that's been tweaked so it can play nicely on other blockchains, like Ethereum. And get this, they made this sale while the price of Bitcoin was actually dropping. So what was the big rush? And here it is. This is the absolute key to the whole story. This wasn't a panic sell, no. This was a smart, strategic move to pay back a loan. And even more important, to dodge a forced liquidation from the DeFi lending platform Aave. That kind of forced sale would have been way, way more painful. All right, let's really dig into the specifics of this high-stakes move and see how it all went down. So, who's the main character in our story today? It's World Liberty Financial, or WLFI, and they are a huge player in the DeFi space with a market cap well over $3 billion. Their whole mission is to build this new kind of on-chain financial system. But here's the kicker. They're officially backed by Donald J. Trump, and that means every single move they make is watched like a hawk. The action they took has a name, proactive deleveraging. And what's so fascinating here is how that one term just completely reframes the entire event. See, this wasn't a sign of weakness. It was a seriously smart defensive play. They were getting out ahead of the lender to avoid being forced to sell their assets at a massive discount. Now, to really appreciate why this was such a big deal, we need to quickly go over how these platforms like Aave actually work. Honestly, the simplest way to picture Aave is as a super high-tech, totally automated pawn shop. You can go there, deposit a valuable but kind of volatile asset like Bitcoin, and in return, you can borrow something stable, like a stablecoin that's pegged to the dollar. But here's the catch, right? There's always a catch. If the value of your collateral, your Bitcoin in this case, starts to drop, your loan can become under-collateralized. And when that happens, the protocol just automatically sells your assets at a discount to pay back the loan. You take a huge loss. That is the financial cliff that WLFI was trying so hard to avoid. And this chart just lays it out perfectly. You can see the two paths they were facing. By deleveraging proactively, they got to sell at the market price, they did it on their own terms, and they protected their capital. The other option, a forced liquidation, which means a sale at a discount, extra penalty fees, and a complete loss of control. I mean, it's pretty clear they made the right call.
Okay, so let's zoom out now and look at the bigger picture here. Because this wasn't just some isolated incident, it was actually part of a much bigger trend happening across the whole market.
While WLFI was busy managing its nearly $12 million position, this much larger figure was casting a shadow over the entire crypto ecosystem. Yeah, around the same time as WLFI's sale, a staggering $140 million in liquidations were happening on Aave. And that tells you everything you need to know. This was a market-wide deleveraging event. WLFI was just one of many big players feeling the heat. For a project like WLFI, this really shines a light on the dual threat they're constantly facing. On one hand, you've got the pure market risk, the ups and downs of Bitcoin's price. But on the other hand, you've got this immense political and regulatory risk, including a House investigation into a massive funding deal from the UAE. All that off-chain pressure makes their on-chain stability even more critical. So knowing all that, what are the key things that we should all be keeping an eye on going forward? Well, there are really two different worlds to watch. First, there's on-chain, the stuff we can see on the public blockchain data. We can watch their wallet for any more big sales, and we can keep an eye on their health factor on Aave, which right now is at a pretty safe 1.54. And then there's the off-chain world, real-world events. And there, the big story is going to be the outcome of that House investigation and how they progress with their banking licenses. At the end of the day, this whole story just reveals a fundamental truth about DeFi. The code is law. It just does not matter how powerful or connected you are in the real world. On the blockchain, everyone plays by the exact same automated rules, whether you're a small-time user or a giant whale moving millions. And that is a powerful lesson for anyone in this space to remember.